And so when I look at the real estate market in particular, there's a market right now for a couple of types of transactions. One is subject to, another one is seller financing. Those two transactions right there were not as prevalent in the last 3 years, and really more like the last 5 or 6 years. Because since about 2017, 2018, you had the market increasing, you had interest rates that were low, and so a buyer could go and chase a low interest rate, they could buy a house at a reasonable price, and in the last couple of years, they hit the peak, right? So now we're seeing kind of a slide of those prices, and the way that I see the market now is I'm not going to chase necessarily a bank loan in every instance. If I'm looking at a property and I'm going to go and make an offer, I want to understand the other underlying factors of, does the person owe any money on that house? Would they be willing to do a seller carry? And I would pay them as if they're the bank because of two factors. One is they might owe as much money on the house as what it's worth today. If they bought it in the last 3 years, that's likely the case. It may be that they don't have enough equity that they could go and hire a real estate agent and pay for closing costs and things. And so I can come in and I can make an offer and say, I'll still pay agent fees when and if those are involved, but here's some creative ways of structuring that. And that can be a subject to deal, which is basically you're keeping existing financing in place. We just closed one that's at 2.85% interest, which is unheard of in an 8-9% market. But because we were able to, one, have the conversation with the seller and get real in the details of how it's going to be if they were to sell their home on the open market, is they've got to think a little bit outside the box and accept that they're either going to lose money or they create and they accept the opportunity of selling it on a subject to type transaction or seller carry.